Well, good morning, everybody, and welcome to Friday, February 28th, 2020. We'll remember this week, won't we? I'm Andrew Horowitz, and I am the co-founder of TriggerCharts. Thank you for joining me this morning. Hopefully, everybody's doing okay. There's a lot of damage that's been done to the markets. We're going to get to that, talk a little bit about some of the opportunities, some of the things that are moving, as well as some of the technical indicators and what they're showing us. Before we do so, I want to mention to everybody that, of course, this is for educational purposes only. It's not a buy or sell recommendation. It is not any kind of suggestion at all to buy any stocks. But yes, we are having some problems. Markets are obviously, right now we see that the Dow Jones futures are off by 426 points. You have to add to that about 200 points for a fair value calculation. It looks like we could open about 600 points down. Now, we're going to be here for 30 minutes. And I venture to say that we're going to see some incredible action during that period. And who knows, there may be a bid to move it up or down, and it's not going to be a very simple 1 point or 2 point move. The fact of the matter is we're going to see a very significant wide range, and you watch that as we can watch the tick on the top here of the of my trade station. With 53 points off plus another 15 or so, I think it is, on fair value on the ES. NASDAQ's down another 163. This is coming off of the worst day in history from a point slide on the S&P 500 and on the Dow Jones Industrial Average. Now, you have to put that in perspective. Of course, there have been other times where we've seen more downslides in any particular day, but that was on percentage terms. What we're talking about right now is on a point value. On the right-hand side, you'll see, and we'll note that, I mean, this is pretty nasty. The fact is that what we're seeing here is a slide and velocity that we haven't seen, and none of us have seen in a very long time. It's probably back to, I don't even think the December 2018 slide was this vertically descending in terms of the move was choppy, it moved around. This is pretty unbelievable. We're talking about let's see, we'll count it out here. 1, 2, 3, 4, 5 sessions, and that's about 10%, 11%. And now we're in true correction territory, and it doesn't look like it's going to let up. Even some of the support levels that we've been looking at, things have been sliding directly through. It's been on every news item that's come out about this coronavirus. Now, remember, we talked about this. We talked about this several times over the last few weeks, and that was that this is not over. The reason that it's not over was not so much that you have to look at this as anything more than a panic situation where people are very concerned about going out, traveling. Leisure industry, transportation industry, manufacturing has already been a problem. And now we're seeing the potential for an impact on the service industry. Now, whether or not we've gone too far, too fast right now is a whole different discussion. But what we're seeing right now is a significant move to the downside, correcting a lot of what we saw through that December period. Remember that December period where the Fed started, well, it was actually November and December and a little bit to October and September to a lesser degree. The Fed started pumping money into the markets through their repo operations and what they called non-Q, or what we're calling non-QE QE. So what we see right now is an unwinding of that excessive amount of speculative interest in terms of valuations, and valuations that really blew out with regard to multiples, where we saw the PE expansion happen, not so much on the fact that there was going to be better earnings in the future, but more so that we had the opportunity and speculation hit that people were just willing to pay more for stocks. Now that we have a situation where earnings are probably going to be coming down, we saw several companies like Apple at first say, hey, you know what? We're not going to meet our revenue targets. Microsoft say, you know what? We're going to have some problems. Company after company already using the coronavirus, whether as an excuse or reality, for their lack of insights into what they're going to be able to provide for earnings clarity moving to the future, or downside revisions on earnings. So what we're seeing really right now is that whole move come out of the markets from when the Fed stepped up their repo operation. We'll see if we can hold some of these levels. I mean, this morning, right before the news came out about PCE, which came out, inflation, the PCE, personal consumption expenditures, a favorite tool of the Fed, it looked pretty tame. We saw that household spending was in line. Household income was up. Numbers that look pretty good. Now, that's a little bit backward looking. We have to remember that. But at the same time, we saw that the futures moved from about on the Dow, negative 140 down to about negative 300, and then started to tail off. And right now, again, we're seeing some big moves very fast markets. I'll mention to everybody here, of course, before we go any further, any of the indicators that we're looking at today, you can get a 10-day free trial over at TradeStation, and I want to make sure that you do that. We have a pretty big grouping today. I think a lot of people are very concerned. As a matter of fact, before we go any further, I'm going to launch a quick poll. It should pop up on your screen or on the bottom of your screen. There should be a little highlight. Do me a favor. The poll question is, are you buying, selling, holding, or absolutely in shell shock panic at this point? So we'll get to that in a second. I'll tell you the results of that, what everybody is coming into. So let's kind of move down here a little bit. What we have also is the problem of earnings and economies with borders closing, guidance pulled. We're seeing that schools are closing down in Japan through the end of March. There's some other issues in China as well. Governments are starting to sound the alarms. They're getting very concerned. They're like not knowing what to do. They're not knowing what they should do. We're seeing that there has been stimulus efforts announced in various countries. Hong Kong is giving about $1,200 to every single citizen in Hong Kong. So, or, you know, that's just telling us that obviously there's a little bit of panic going on, reaching for what will be the opportunities to try to stop and slow down this mess. It's interesting to note that China has been doing much better than we have over the last couple of weeks, and emerging markets, in fact, have been doing a little bit better. I find that really interesting. I think this whole discussion that we've had over the last several weeks about there is this speculative buildup and this margin, not the margin, the PE expansion that went on, multiple expansion, that really wasn't justified, is pretty much just coming out of the markets. How much more are we going to overshoot? We're going to look at some very interesting key levels. Moreover, the psychological levels that are showing us that things are kind of oversold at this point. Remember, the idea of oversold versus overbought can be, we could see a move past either of those numbers at any time. Markets can get more oversold, they can get disjointed, they can get panicked, whereas markets can get gleeful, and they can get more overbought in certain circumstances. We were clearly in a range of overbought to a degree, but this kind of move that we're seeing right now has pushed every single indicator that we have to the major oversold levels. That doesn't mean necessarily, you know, you're going to jump in with both hands, but, you know, nibbling, getting in, getting your allocation back to normal. If you did pull back a little bit, could be an interesting sign here, with the idea that we have coming into the end of the month, and this is a weekend, so we'll see what happens today. Not looking good off the bat, though. But yeah, this is psychological and panic selling. All right, here's the vote on the poll. What do we got here? Pretty much everybody there. About 85% of the polls in. We got 13% to say they're buying. We have 27% say they're selling. 53% that say they're holding, and 7% totally shell-shocked. So there you go. That describes you, and that's something that you think that you're right about. We'll kind of go through that. Economic reports pretty much on hold. We can't really trust any of the economic reports that are coming out right now because they're backward-looking. And with a backward-looking economic report, really, we're just not getting any clarity about what's happening moving forward. There's still a lot of haze surrounding on about what's going to be happening with the economic situation around the world. But the more information that we see, the more and longer this goes on, the more impact it's going to have on economies. And that's really what the markets are trying to price in and figure out where it is that this is going to go, how much is it going to cut earnings, what does that mean? We see that there's a significant move on treasuries, and yields have come down. I mean, incredible move on treasuries over the last week or so, to a point that the 10-year and the 30-year are now at historic low yield. Historic low yields. This is lower than what we saw back in 2008 when the Fed basically cut rates, or in 2009, when the Fed cut rates to the zero rate bound. We're lower now. That's pretty amazing. So when we wonder if the Fed's going to come in and what they're going to do and how much that's going to help, that really becomes a question mark, because we've already cut a few times last year. They're already pumping money into the markets. That's not helping. How much more of an impact can have a 25 or 50 basis point cut at this point? Even a 1% cut, what does that really do? It's going to put more loans out there. It's going to make loans cheaper. Yes, it will. That will be helpful. Will it put a bit of a bottom under the markets? Potentially. Does that help economic activity in the face of an all-out panic if we get to that place, if in fact we see the spread of the coronavirus here and people freak out? remember something about the coronavirus. I think this is really important to recognize. The issue here is not that it's, well, it kills everybody. You know, it's this horrible thing. It just kills everybody that it gets to. It's not that. In fact, the mortality rate is about, I think, 2 to 3 times that of the flu. However, the fact is that it's the transmission mechanism that gets everybody concerned, because you don't want to get it. You just don't want to even have to deal with this, right? The fact is that when you look at the transmission mechanism and you look at the incubation period, there's about a 14 to, some people say, a 3-week period of incubation inside your body, whereas you will not show signs that you actually have this. You're not going to have a fever. You may not have a sniffle. You may not feel bad at all. No muscle cramps. But what you're going to have is something much worse, and that is that you're contagious. You can spread this to other people without knowing that you're actually sick. So as in when you have the flu and you have a fever, you're not going to go near people. You're going to say, hey, fist pump, or not even touch me. Don't kiss me. Don't hug me. Don't get near me. Where you have other diseases that are problematic that may hit you very quickly and bam, you're in the hospital. Well, this is much different because you don't know that you're sick and you still can transmit and you are contagious. So that's what people are starting to freak out about, that, you know, we don't know what to do, where to go. Should we go out? Should we not go out? Should we stay home? That's why you're seeing a bid on a lot of the stay-at-home stocks. Like Netflix had a good day yesterday, even though we saw this major sell-off. Seeing like Zoom Media, which I think is actually going to come down. But right now, everybody seems to believe that, well, with Zoom Media, which we're using right now for this particular webinar, that there is going to be a level of people utilizing this instead of meetings. All right, everybody can see my screen, right? Can we all see the screen? It's all looking good? All right. All right, let's move on. Kri is oversold. Let's look at that right now. I want to look at this situation right now. So what we're seeing here is, and markets are starting to tick down again, down 500, which means we're going to have an opening right now about 700 points down on the Dow Jones Industrial Average, which is pretty amazing, actually, like I said, after this major bar that we saw here. We see a -6, the oversold reading. I mean, look at this. We are seeing that right here, up top here. We're seeing that there is this oversold reading that's happening. Worst I've seen in a long time is a -7. We're at a -6, and we have clusters forming. Oftentimes when we see those clusters, or at least one of two of these, there is usually a reversal that happens in a few days. That's why we call this the key reversal indicator, or the KRI. Does one thing, as I tell you all the time, does one thing only. It gives a psychological measurement of how we are, an overbought, oversold, where we are. And I think last week we talked about that we're getting a little bit hot, but then it started to resolve. And then now we're getting these clusters, a -6 on the bottom. And we can see that what it says very simply is the overall market is measured by the KRI algorithm is significantly oversold. That means there'll be potential for a short-term reversal. It could be a day, 2 days from now. But then you have to look at where they're going to be resuming that downtrend, because there's a lot of pressure on the markets. I think it's really interesting to look at this. And then in particular, we want to pair this with, let me get that. Oh, there we go. Want to pair that with what we're seeing on the McClellan oscillator, -362. See that line right there? -372, excuse me, 372. Lowest I've seen in years. I think going back to, it could be when it closed yesterday, back down to 2011, when that sell-off happened. And this shows us the basic trend of winners to losers, or advancers, decliners, if you will. And what we're seeing here is this major overbought situation. Again, not necessarily saying, hey, go in and buy right now with both hands, but getting towards a level that is kind of ridiculous. We're seeing that the 52-week new highs down to 19. Again, very low levels that we usually see where there is signs of a bottoming that's going on. And then we see the Spearman down at this -89 level. Again, when you see that, we kind of look at this, and let's take a look at here. That's where we see a bottom. We see some bottoming action. Right over here, this one lasted a few days, so some bouncing up and down, bottoming action when we get down to those levels. So we have the Spearman telling us there's some bottoming kind of formation happening. We have the McClellan that's telling us there's some bottom formation happening. As a matter of fact, Tom McClellan will be my guest on the Disciplined Investor podcast this week. And then on top of that, we have the KRI, which is saying that, hey, you know what? We're seeing some significant bottoming formation, the look of that happening right now. Clearly, markets aren't saying that right now because they just want to sell. I think what's happening is that people are just like, you know what, the hell with this. We got a weekend coming up. I'm just not interested. All right, let's go back to What else are we going to talk about? Earnings movers. We have APT. You got to look at some of these names. Some of the names that are involved in anything to do with the coronavirus. For example, mask and frock and smock companies, possibly companies that have some kind of cure or at least are on fast track to create some kind of cure or at least some kind of drug that deals with this. We're going to talk about that. We have JETS, which is the airline sector, which looks absolutely abysmal. Next week coming up, auto and truck sales, ISM manufacturing, ADP employment numbers will be on Wednesday. Then we get into the ISM services, which I'm going to be looking at. I think that's really going to be important to look at, the ISM services, because that was one area of the markets and our economy that was holding up really well. The employment report on Friday. So all these things will be really important. Some of them backwards looking. Some people think that the Fed's going to have to come in right now and step in. I think there needs to be something done right now to assuage markets that, you know what, all is not lost. You don't need to keep on selling. Don't just throw the baby out with the bathwater, because many stocks have really come down significantly. While the market itself is down 10, 11% from the highs, the S&P 500 is down, I think 7% for the year, or 5.5%. Dow is down 7.5%. NASDAQ's down 3 or 4% for the year, not including today's action. But yet, at the same time, a lot of stocks are down 20, 30% off their highs. So that's something to look at. We usually do see that, and we're starting to see another pickup here in the futures moving down. So, these are times to get very concerned. There is a wide range right now as we see the VIX popped up to, I think it clipped 40 yesterday, the VIX. I mean, this is from when it's been at 11, 12, 13 for a while, started moving up a little bit, then it just really pounced up to the next level. So we're seeing a lot of just panic selling going on into the open, which is only 13 minutes away. But we're seeing this get towards a point of the last night's lows. And this is a line right here that I kind of placed. I thought it would be an area of interest as we saw some levels before that were knocking on the resistance when we saw that downturn back last year in the summer. And again, we've taken this all back. Think about this. We had a 30% uptick on the 31% on the S&P 500 last year. We've taken about 35% of that gain out already, or 40% of the gain out already this year, just in the last 5 days. Pretty scary stuff. So if you're nervous, don't think that, well, something's wrong with you. This is a nervous and nerve-wracking time. Whether or not you're making money, losing money, what happens here in this circumstance is, even if you were all in cash, even if you really don't pay a lot of attention to the markets, the news is highlighting this every day. It's making people feel really bad. And when that happens, people kind of get into this loop. And when you get into this loop, what happens is that you are going to probably, or people pull back, they don't spend, which then exacerbates the situation. The psychology, the mental note of what you take on everything that you read throughout the day. So you have the market selling off, you have this coronavirus fears, you have borders shut down, you have an election issue going on, you got Super Tuesday coming up Tuesday. It's like too much to deal with. And even if you're not invested, it does impact you, and that is causing angst across the board in terms of consumption, consumers, and the markets. All right, let's see what else we got here. Let's go to take a look at some of these stocks. So let's see where we are. I mean, crazy numbers on some of these levels. We're down 3% again on the SPY right now. Seeing this drop down very significantly. That's where it's playing out. We're seeing that APT is going to be a stock to look at. This is a company that it doesn't really matter what they do when we talk about technical analysis, but what we're seeing is that with the technical analysis, we did see a nice launch. You could have picked up this stock in the $7 range, currently trading, say, at 42. 42. What do? They make masks, which we're pretty much out of. They make gloves and smocks. They do a lot of variety of things. Novavax. They make some vaccines, up 25% of 14. This we signaled a couple different times, had some volatility inside of the range, and then picked up off of that from 818 up to 1180. Yeah, this is getting kind of ugly, gang. It's getting really ugly up top here. I'm not sure what the particular news is, what's going on, but we've only been talking for about 20 minutes right now, and we saw about a 180-point drop on the Dow Jones futures and this. So it's getting a little nerve-wracking, getting a little scary. It is, seriously, I get it. AHPI, this Allied Health Products, another stock in the area of this potential, well, we'll just say that they're in the coronavirus area. What they do is not really mattering because people are just buying these things hand over fist. Right now up 159% at $40. Can't even get there on the chart. Closed yesterday at 15, currently at $40. Called a nice level. This is the altimeter showing us that we saw there was this long range of just consolidation, nothing happening. We saw it start picking up here on the aileron in the beginning of this year. Then what happened, it started moving up, dramatically moved up. We saw this big move, a couple of ins and outs right here, and then it turned around and just launched. So an amazing return on this. And again, this is all about the fears about the coronavirus. Pretty amazing. Crude, on the other hand, is seeing some problems. We had a short call about 4 or 5 days ago on the daily chart. The yellow indicates a short, or, excuse me, the yellow indicates an alert, either long or short. So when we look at this, we see that the short was called here after it held support right at that 50 level, that psychologically important 50 level. And when we break through the altimeter, we get an alert on the autopilot. And again, all this is available. There's instructions, there's videos, there's all sorts of things over on TriggerCharts.com with the 10-day free trial. You also get a user guide, etc. But there's a lot of instructional and tutorial videos to understand this. We only have a half hour to go through all this in the morning. But basically what you have is this move below 50, and that was it. You know, we're down at 45, 12, down about 4% again today on the destruction demand that we're seeing around the world. Other names of interest that seemingly were impervious to any kind of selling pressure that went on was a company like Microsoft. Microsoft hit about 185. It's dropped down today at 152. Let's see what that is on the chart. Right about here. That's actually a pretty good support level on Microsoft. I like that. But I like it in the context of a reasonable market sell-off, not a panic sell-off with markets. Apple also, they came out not faring as poorly as some other names. Definitely down another 5% today. Down at the 259 level. Let's kind of see where we are. 259? Yeah, 259. So that's in nowhere's land here. Could probably try to support about the 260 level, coming back down, taking all of the December gains out of Apple, which was a safe haven play for some time. Space, we talked about that many times, but look what we had here. We had this really nice up. We saw that we had I'll kind of put this on the chart so you can see it. We had a nice call to the long side, about 19, after we had this beautiful run up for some time. We went up all the way up to about 38, moved out about 35, then got a short call at about 29, now trading at 19. A lot of movement on these speculative names right now. I think there's still opportunity in this longer term as when people come back to the markets. But right now, it looks like people are just steering clear. We had a question about the Qs from somebody. Let's kind of move into that because we're talking about Apple, of course, and Microsoft, which is there we go. Qs, where are we right now? Down $7 at 198. Wow. Yeah, it's pretty ugly. We're below some really key support here. That's very concerning. 198, where are we at exact? 198.75, right about, this range right here. It seems to me that when we look at this, right about there. When we look at this, there was some support that really broke some really good support right about the 201 level. So, I'm not sure right now what to say of some of these panic numbers. A lot of people say, you know what, when there's blood in the streets, start thinking about getting in. It is a reasonable time to start thinking about building a really good list for yourselves and understanding what stocks will take a bounce if markets come back. We have a lot of valuation that we need to blow off of this from the run that we had, that speculative run. Let's see if there's anything else right on this list. In the chat, which I'm gonna type in there, you may see a little blinking light on the bottom of your screen right now, the chat. Open the chat, put in your symbols that you want us to look at. Another area in the Qs is Amazon, currently trading down 66 at 18.19. Yeah, right on support right there. It doesn't look like the best support ever from a standpoint of Amazon. We did see it move up recently. Right now it's right about 18.19, right about there. So we are seeing that there is a ability to draw several lines across and connect them. And I like to always do that. When we draw lines, it gives the opportunity to connect lines across. And what do I mean by that? Well, we have these areas of support and resistance that are drawn automatically on the chart through the altimeter on the Commander series. Okay, so what we do with that is we then find where there were other historical points of interest and how intense those were, how wide the ranges were from the support and the resistance levels, and then look at, okay, was there support there? How significant was it? How many times can we count? We see this support that is drawn on the chart right now link up with another support range. So right now what we're seeing is there are some good support ranges going back. Amazon seems to be possibly an area of interest right now. Again, we called this long off of this area. We had this major blowout upside on earnings. And then what happened was it just continued higher. Then we got a short call, confirmed short call back a few days ago and back down. Now, here's the point. We utilize these colors and we utilize the ease of these levels because what we're using here is a process of market profiles, volume, and price put together to understand where the line in the sand is, giving us a really good understanding of, well, where's the support resistance? Not just from a simple moving average, not just from a line drawn on price, but we include the volume in price. And why you get these different levels, and sometimes they look like, well, why is it down there? I don't understand why it's up there. What happens is we're really focusing in on the volume at price levels, and we use an algorithm to determine when to swing, to move the next one, to draw a new altimeter, and that's why you get such really good signals with this. Jets. This is pretty bad, to say the least. This is the airlines, down another 2.5% today. In line with markets, a little bit less than markets today. We'll see how this goes. It's still an ETF, not as much volume. But, I mean, we're looking at a 32 down to 24, 8-point move, 30% or so on that. That's pretty ugly. This is the ETF that holds is a big holder of the airline stocks, which obviously are front and center, front line for the coronavirus issue in terms of travel and leisure. Probably only second to the cruise lines, which have seen, here, let's take a look at some cruises. You know, this is Carnival Cruise Lines, 52 down to 30. That's pretty significant. Royal Cruise Lines, very similar look, from 135 down to 70. We're talking about close to a 45% reduction in price on these, and maybe rightfully so. TLT is seeing a really amazing bid, up another 1.73% as bond yields come down. We're looking at this as a little bit of a concerning area. There's only so much we could really see bond yields go, even as the Fed may in fact drop rates to try to combat some of this. You know, the fact is, how much more can they do? The bonds have already adjusted to what they perceive that the Fed's going to do. Unless the Fed comes out with something much more significant, it looks to me like, you know, we are in that range of, you know, almost a panic buying mode for the safety trade of these areas, and particularly the long bonds. So it's kind of looking at maybe that's not, I mean, it may play out for a little while, but something that we just have to look at that's maybe going to reverse down, and we'd see it down back, you know, at these levels of about 146 after we can get a little bit of a drive up. I mean, this move over the last several days, if you kind of look at this, and while it's been on the rise throughout 2020 for a lot of other reasons, the fact is that it just seems like this is overdone to the upside. Now, we are getting confirmed long signal, and we're getting it at an all-time high. If you look back to history, this is an all-time high. But this move, the parabolic move that we're seeing here, that lines up with the parabolic move down that we're seeing on the SPY, kind of lines up with the thought that if there is a rebound, and there is maybe even taking back 4 or 5% after today's action, that, you know, there is the potential for yields to start coming up a little bit if we have some reasonable economic numbers that come out as well. Couple of people asked a couple of things. We have one more minute. Let's put in BA. I mean, this is also a big problem. Down at 278. Nobody thought it would break the 300 level. Confirmed sell signal or a short, either way you want to look at it. Back at 332, now trading pre-market 278. Last one we can get to today. We talked about this, the NQs. That was the QQQ, same thing. Looking pretty bad overall. Right now trading down at 81. Where is it now? 81.42. So that's right about, yeah, not a lot of support down to probably about, I would say, 81.11. So another 30 points on that. We'll see what happens. Make sure to check out all the things that we have over on TriggerCharts. It will help you, make you a better trader. It will make you more confident. It will give you several different signals in terms of where we are with regard to any particular instrument. It could be Forex, it could be stocks, it could be ETFs, it could be futures. A lot of people, check out the reviews. We're the #1 reviewed, the highest reviews on the TradeStation trading app store. So check that out. We'll be with you next week. You'll be okay. Don't worry about it. Take a deep breath. Let's see how this all plays out. Markets just open. Let's see how this all plays for the day. See you again next week.